Welcome to the coffee shop, everybody. This is your host and your barista, Eric. And what I have today for you is an EMA crossover strategy that works. So by and large, you all know already. I've spoken to you about it before. EMA crossovers or crossovers, moving average crossovers strategies, they do not work. But if you have the right tools and the right information about what's happening in the market, then yes, you can do an EMA crossover. You can do a moving average crossover if you are on the right time frames and if you're using the right indicators. So what do you know? You guys follow me. And if you don't follow me, you should be following me, right? So you follow me because you guys have the Heiken Ashi Algo and you guys are the coolest ones in town. So thank you for all of that. Big thanks to everybody. I don't have time to do a fully fabricated video for you guys, with all the bells and whistles and the slides and presentations. I don't have that. I'm going on vacation for the next 7 days or 10 days, and I wanted to put this strategy video out there for you guys so you guys can play around with it and really get used to what's happening with the Heiken Ashi Algo. So this will be your training wheels while I'm on vacation, and then we could talk about it when I get back. Now, let's get into the things that I need you to do before we get into what the indicators are and the settings for them. So what I want you to do is I want you to go to tradingview.com, right? And I want you to find me. My name there is Coffee Shop Crypto. Go ahead and find me. You're going to see my profile and it looks like this. Now, why do you need to follow me on TradingView? Well, that's because there are certain things that I put here which you need to use on your charts to follow my strategies. For example, the Coffee Shop Crypto Fibonacci tool. Okay, you need to have this thing set up this way. For example, here is the common looking Fibonacci tool. You're not going to be able to use that for this strategy. You need your Fibonacci tool to look like mine. There. It has to look like this because you guys know how I like using this thing. When you're going against the trend, that's your take profit. When you're going in a range, that's your take profit. And when you are going with the trend, that is your take profit. This would be take profit 1, take profit 2, take profit 3. Okay? You guys already know that. And for anybody who doesn't know that, well, now you know that. If you go to this idea that I posted in TradingView, what I want you to do is two things. First, open the idea. Second, hit the boost button, because this helps the editors make it an editor's pick and it gets to the forefront and everybody else gets to use it. Also, inside here, you'll be able to see the settings that you need for your Fibonacci tool. It's all right there. Okay, good. Now, also, thanks again for boosting it ahead of time. I know you're going to go and do it, right? You're going to do it? Okay. Anyway, so now let's talk about the indicators that you need and how to set them up. What you're going to do is, first thing, you're just going to go to your indicators tab. You need the Heiken Ashi Algo. You need this thing. I just updated it. And if you're following me on TradingView, then you will be able to get updates on it automatically. You won't have to wait for them on YouTube. So Heiken Ashi Algo Oscillator is what you're searching for. If you don't want to type all that out, then just put Ashi Algo. Heiken Ashi Algo Oscillator by Coffee Shop Crypto. Okay. Open the read more button and hit that boost button right there. That helps upvote this thing. That helps me out a lot. Okay. Doesn't give me any money, but it does allow this indicator to get pushed to the front of the other indicators in the list. And it also shows me how many people are actually using it. So you've got the Ashi Algo, the Heiken Ashi Algo on your chart. Also, what I want you to do is type in EMA, right? Moving average exponential. Hit it 2 times, okay? Hit it 2 times, add it to your chart twice, okay? Now, you've got it on your chart. Go to the Heiken Ashi Algo, and let's go to the Inputs tab. Scroll down, use your default settings. Scroll down and change this to EMA. Change this to EMA. It is your RSI Moving Average settings. Change them to EMAs. You can set them as SMAs if you want, but I'm just preferring to use them as EMAs, okay? Now, go to the Style tab and scroll down till you get the average RSI trend. And I want you to turn it off. The only reason I'm asking you to turn it off is because it can be a lot to look at on your screen until you get used to what the algo is doing for you, okay? You don't need to see all that, but it is very, very helpful to see that. For example, you can see here, you got yellow, here you got yellow, here you got yellow with no red. This is your entry, and this is your entry, right? That's telling you where your entry is. Now, I'm gonna turn it off for here. There we go. So you got your settings for the Heiken Ashi Algo. Now, go to your first EMA, go to the inputs tab and make it a 10. This is a 10-28, 10-28 EMA crossover strategy, right? Make the first one 10. I made mine white and turn off the smoothing line. Now go to the second one, do the same thing, but make it a 28 length, okay? 28 length. Go to the style, make it a dark color, and turn off the smoothing line. You're done, okay? Now, you should have two EMAs. You should have a 10 period and a 28 period EMA, right? And your Heiken Ashi algo. Everything looks like this. Don't worry about this. I drew that on there. It's because I'm doing a study for something, which I'll show you in another video. Now, you need three things to take place in this EMA crossover, right? So, in the EMA in this strategy, first you need the EMAs to cross over each other, and that happens right here, okay? It also happens back here, and I'll show you right now why you need to have your Fibonacci tool set up the way that mine is, okay? Here's your EMA crossover, right? You need what else? You need your stochastic to be in a proper position, okay? So here's a crossover. Your stochastic is in a downtrend, and it's below the midline, okay? You're good to go so far. Proper candles breaking the average, okay? I didn't write the other thing here that you need, but I'll show it to you, and it's just kind of self-explanatory. So proper candles breaking the average. What I did was I took the average RSI, okay? This is the moving average for the RSI. What I did was I colored mine white just so you can see it in this chart, right? Just so you can see it in this video. Your candles have to be opening and closing below for a short trend, okay? If you're going short, they have to open and close. They cannot be touching that average, period. That's it. They cannot be touching the average. So you have your crossover, you have your stochastic in a downtrend, and you have your candles open and close below the average. But the other thing you need is this trend has to be red for a short, right? So here it changes to red. You see it on this candle, and then you need what? You need your candle to break majority below the -10. That's it. You have to break this range. You got to break that range. Now, this is giving you a better indication, no more waiting around to know when it's going to be breaking that range. So, like I said, your Fibonacci tool, you need that, right? Find your high. Here's your swing high right here. That corresponds with the swing high. There's a wick here. You can't see it in the video, but it's here. This is the highest wick before my entry candle. Here's my entry candle. This is the highest wick. So I'm going to go to the close of this candle, and I'm going to go to the entry of this candle. The only place I'm going is take profit 3 because everything has lined up, and I can go to take profit 3 on this trade. Here, drag this down the white line to the close of the candle and go to take profit 3. Now, you'll see that you always need to pull back just a little bit, right? So if I pull back and move this to my take profit level, I end up getting out right at that wick, right there. That is the move, the entire move. So when you get a crossover, now you can know when you can catch the entire move. It's right here. Now, what you can do as a safe bet is you can also get out at take profit 2, knowing full well that price is going to eventually reverse from that level, okay? It's just that this is going to an extreme, okay? This is not practicing proper risk management, but this is practicing proper risk management, okay? You might have heard about that in other videos. You know for sure that price will make it this far, okay? Now, that's one entry. That's an entry for a short using only the Fibonacci tool to tell you where to get in and out. Now, let's talk about the long entry, right? Now, for this long entry, you can use the RSI formula, or you can use the Fibonacci tool to set your trade and walk away. So here again, you have a crossover, right? Here's your crossover. Your Heiken Ashi candle it's open and close above both averages. Your stochastic is moving up, but your stochastic is down here. It's below the midline. It needs to be above the midline, right? This leading edge has to be above the midline. So this is an uptrend. It's a pullback. It's a pullback. Now for this means you're going against the trend. So when you set your Fibonacci tool, you can only go to take profit 2. Oops, I didn't want to do that. You can only go to take profit 2. You can't go to take profit 3. I wouldn't do that, okay? Because there's more likely of a chance that price will move against you. Also, when you use your RSI formula, you have to subtract 1 from the results. And people who are using the RSI formula, you'll know what that is. And I'm going to use the RSI formula on this one right in front of you. So let's go through the confirmations again. You have an EMA crossover. That's here. Your stochastic position. It's called stochastic position because you just need to know what is the position, what's happening. All right. So stochastic should be above 0, but it is in an uptrend. So you know that you can still use this, right? Then you have proper candles breaking average. I definitely want to use this at this point because I'm already breaking above both averages. Now, what else do I need? I need this background to be green. So, and I need to break majority over my plus 10. So if you look closely here, this breaks majority over a plus 10, right? So that means this is not my entry. This is my entry because more of this candle is below plus 10. Majority of this candle is above plus 10, right? So this is a strategy I love using on multiple time frames. Again, this is for a 1 minute, 3 minute, 5 minute, 15 minute. What you can do is you can set your chart for a 5 minute or a 15 minute. When you get a crossover, drop down to a 1 minute and enter your trade, do your thing. That's it. So I have everything lining up here except for my background. Then my background lines up here and then my candle breaks here. So this is my entry, right? Okay. So I'm going to use the RSI formula. I enter at the close of this candle. I'm looking for my swing low. That's this little plateau right here. Okay. RSI kind of hits this little plateau here and I'm picking this as my swing low, right? You can see big candle here. There were 2 red candles moving down. So that looks like this. Price started moving up, moved up further. 2 candles moved down below this low, right? They moved below this low. And then price started moving up again, which means this is where price swung down. This is my low for this calculation. The low is for the calculation. It is not for your trade. Now, RSI formula says 13.91, right? So this is that would be a 1 to 3.91. However, since my stochastic is on the wrong side of the trend, it's below. Instead of being a 1 to 3.91 for my risk reward, I'm going to go 1 to 2.91. Subtract 1 if there's ever anything wrong, okay? So 1 to 2.91, that's here, 1 to 2.91, and I'm going to pull it back to 1 to 2.8. Again, always pull back just a little bit. Let's just drag this out, see where this goes. And again, I need to set my swing low to the actual low. This low is for the calculation, but my actual swing low is down here, right? My actual low is down here, there, that's it. So now this trade turns into a 1 to 1.8. If you want to be really safe, you can turn it into a 1 to 1.5, all right? Set your trade, enter, you've already entered. Now you are simply adjusting your take profit, okay? Now, let's see where this goes. And again, later on, I saw another crossover take place over here. So where does this go? Price comes up. Let's go. Let's go. Come on. I'm going to get rid of this because I don't need to show you I don't need to show you a secondary long entry. I don't need to show you that. There. And this. There. Now, you can see why I ended up setting that swing low where I did. The actual low, not the calculation low, okay? Price did get this big push down and looked for liquidity. Now, the reason for that is because there was things here called imbalances. I can see it in the chart, and your algo tells you it's right here. This is an imbalance in the market, which means price is going to go above it, and then these big long wicks are eventually going to come back down to this level and stop people out, scoop up liquidity, and move in the direction it wants to. And sure enough, that's exactly what it did with a big candle. It received enough volume and liquidity here because it took everyone out with these long wicks. Look at this, okay? It took people out. The imbalance is here, marked on this candle, right here. And just everything below it just took place as an imbalance. So that being said, yeah, your RSI formula got that one. Now, what if I ended up setting my actual swing low and did the whole, actual, there we go. And I said that was what? That was a 1 to 3.91, 1 to 2.91, right? So it's right now it's a 1 to 2.27, 1 to 2.91, and that brings you right here. So I still would have made that trade, but I pulled back just a little bit just to be safe. Now, there are your entry rules, right? Now, let me see if I can find a short position. I marked one. Oh, no. Let's just put one up here. Remove these. I'm going to look for a short position. I'm going to wait for one to pop up on me here. I'm looking for an EMA crossover to the downside. Price is dropping below, and then I get an EMA crossover right there. Now, this is not an entry. Why? This is an entry only if you use Take Profit 2 on your Fibonacci tool. All right, that's what this is. And that's because your, what do you call it? Your stochastic is on the wrong side, and you have not broken below your -10. So let's just skip forward. I want to break. See, it never broke below. Now your stochastic is moving below the midline. You're getting a red background, right? You're getting a red background, and your crossover took place. So here is your crossover to the downside. You did not break below, right? You didn't break below, and your stochastic is too high. This is not an entry yet. So let's skip forward again. Do I have a break below? Yes, I do. It's holding good. So this is my entry here for a short position. I enter here. Here's my swing high, which is a previous candle, right? And what I could do is I can say Fibonacci tool right there. Okay, go to the close of my candle. Now, I'm in a downtrend. This is an actual downtrend. Everything lines up here. I want to go to Take Profit 3 for this one. Now, I can do two things here. I can also set my RSI formula, which is 1 to 3.21, right? This is 1 to 3.21. I'm not going against the trend. Everything looks good. So I can set this as a 1 to 3.21. Where does this go? Let's see. 1 to 3.21 here. 1 to 3.21. I'll set it as 1 to 3. You can use whole numbers if you like to, right? Just to be safe. Now, go here. Let's see. Let's watch this take place. Now, this would have been a good level to get out. Again, that's an extreme. This is using proper risk management. This is using no risk management. Okay, none. This is just really trying to go to an extreme. And let's watch how this price plays out. I would have set this at Take Profit 1, and then I would have left maybe, I don't know, a couple of dollars on the table and wait for this trade to get out here. So this one ends up going into the downside and downside again. There you go. Now, what happens after this level? Watch carefully. This is the RSI formula level. This is the Fibonacci level, okay? Yeah, what I didn't do was I didn't set my actual swing high. My swing high is here, the first red candle. This is my swing high. There, that's my swing high. I don't want to leave that out, okay? So here's the things that you need. You need a moving average crossover to the downside. You need a stochastic moving down, and it has to be below the midline. You need a candle breaking down below your -10 and a red background. That's what you need, okay? All three things line up here. That gives you a downtrend. You can use the RSI formula without removing anything, and you can use the Fibonacci tool without removing anything. Now, what I did wrong with my Fibonacci tool was this. This is my swing high right here, same candle. Instead, I set my Fibonacci tool at the wrong point. I was supposed to set it here, right there. Now, if I do that, I set it here. I put this white line at the close of my entry candle right there. And I go down to Take Profit 3 like I originally wanted to because I'm in a downtrend, right? That would have been there. And look what the Fibonacci tool does there. Brings me all the way down to that level. What happens at this level? Guaranteed that price moves the opposite way. So let's see. Let's see what happens there. Price hovers around a little bit. Stochastic starts moving up. You get an imbalance in the market. And what happens? It's curving back up. That's what's happening. Price is slowly curving back up. But you see how it just remains in this nice long range for a good amount of time. And yeah, we don't need to play this video any further. You can see that it actually does move back up, and it comes right back in and right back up, and it does eventually probably stop me out. So that's all of that. Now, you guys know how to do this. Watch the video, replay it, look at the information on the entry rules, and you'll be able to catch moving average crossovers the right way every single time. Now, what do you look out for? When do you not do a moving average crossover? Here's an example of when you do not do it, okay? Here, you have a crossover, right? Here, your candle is above both averages, okay? You finally get your crossover here of your trend, but look at your stochastic. It is entering into the overbought area. Do not enter, okay? Because you're not going to be able to catch this move. You want it to be closer to zero. That's where you want it. You need it. You do not want things to be in this overbought area. You may have been able to trade this to the upside, but there would have been a lot moving against you. You would have been stopped out. Perfect example here. You end up getting above both averages. Your stochastic is way up here, but what happens right away? Price comes falling down, even after this crossover here. All right, you get a crossover to the upside, right? Your stochastic is too high, and your candles are good. You never get a green. You never get a green background. So you need that big green background. You need things to line up properly. All right. So follow the rules. You'll make it every single time. Here's another one. Cross down, right? Cross down. Stochastic finally changes to red. You're below both averages, and you cross below your -10. This is a wonderful point to get in because you actually get in at a high price for a short, right? As opposed to getting in at a low price for a short. And it's really good, okay? Follow these rules. Crossover strategies, now they work. Enjoy.